Hi everyone, it's Emilio Espinoza with Espinoza & Associates. Here again this month and wrapping up the year of 2022. And what better way to wrap it than having a chat with a mortgage broker. But not just any mortgage broker. Today we're sitting here with Simon Lin of Bespoke Mortgages, because he's a guy who's sought after today. He's popular, everybody's calling him because the hot topic these days is mortgages and interest rates. So, Simon.
Yeah, thank you, Emilio. I appreciate the opportunity of being on your show of Let's Chat. My name is Simon Lin, mortgage broker and managing partner at Bespoke Mortgage Group. Been in the industry for 20 plus years, so happy to share my insight on the topics that you have for today.
What we should address is kind of like maybe let the viewers know a little bit about your experience, what you do, who you work for, etc.
Yeah, thanks, Emilio. I appreciate the opportunity of being on your show here and explain a little bit about myself, my background. I've been in the mortgage industry for 20 years now. Bespoke Mortgage Group, I co-own with my business partner, and so I'm a mortgage broker and broker owner. We have about 35 agents with us and 6 full-time underwriters, so we have the capability of handling a lot of volume and making sure that we get back and catering to everyone's individual needs.
So Simon, you must be a very popular guy these days. I'm sure you're getting a lot of calls from people, and they're asking you about mortgages. With your experience and like obviously your experience that you've had in the business, what are you kind of seeing from, or feedback are you getting from most people nowadays?
Yeah, so the state of the market, Emilio, we've been in the last 12 months in a rising interest rate environment. So it's been putting a lot of pressure on affordability for buyers. And that coupled with the supply chain, increase in food, gas prices is putting a lot of pressure on everyone, and their average income is not increasing at the same level as everything else, right? So definitely a lot of people are feeling the pinch. And in terms of mortgages, right, we've seen fewer transactions this year. And in terms of us, we've had a lot more phone calls and more legwork for each individual client file with just walking them through all the different scenarios between variable and fixed, and just hand-holding them and going through one's, budget or expenses to ensure what they're able to afford and what they should be looking at affording in terms of how far we're going to see these interest rates increase, right? So a lot more. Definitely a lot more phone calls.
So how much worse is it going to get?
Yeah, great question. No one really has a crystal ball, but the sentiment from a lot of these economists from the 5 major banks, we're kind of hopefully anticipating interest rates to be dropping mid to end of next year, right? How far they'll drop, we're not really sure, but if I was to take a guess at it, anywhere from high 4 to mid 4% range is where I think we could anticipate rates dropping to from where they are today, which on prime is currently
at 5. That's what I was going to say. So we're talking about the prime, not the Bank of Canada overnight rate.
It's the Bank of Canada, which is sort of the same measurement, what is used for the variable rate, which is prime. Prime's currently at 5.95%.
And you're saying that dropping to you said high 4s to mid 4s?
So that's in the sort of general fixed rates. In terms of variable rates, prime's at 5.95%. If I was to take a guess at where they would be at the end of or the mid of next year, maybe 1% lower, so closer to 4.95%. Is my prediction. We are anticipating another rate hike in December, but after that, from what I'm hearing and the sentiments from other economists is that things will be status quo in 2023 and no more rate increases.
I think I agree. I think if we're talking about just the Bank of Canada rate, which is at 3.75 today, I think to your point, I think it will go up to probably 4, and then they're going to have to do something to kind of scale it back, because I think next year it's really going to put the market at a lull. I think people are just going to kind of sit back, be on the sidelines, and see what's going to happen.
Yeah, I definitely agree. A lull is maybe needed, and kind of in terms of the government and seeing what effects these interest rates have really done, because they've increased rates at such a short period of time. It really, I don't think we really see the ripple effect of these interest rates.
No, because they've done it so sharply, right? Like if we're looking, I think what happened is I think we stayed low too long, right? And I think we the government kind of dragged their feet on it a little bit longer than they should have, because if we were looking at inflation rate at the beginning of the year, we were already at 5.1, and they should have done an interest rate, and they didn't. So I mean, it's history anyways. But I think we stayed there too long, and now they're aggressively doing it. And like to your point, I think a lot of it is for those that are watching is you still haven't seen that true effect right away. Like that takes time for that those increases to really affect the day to day. And I think when people kind of settle their feet, they'll kind of see that it isn't that bad. Now I've been hearing a lot of even buyers, would-be buyers, and even people that are maybe looking to upsize. They're thinking that the government should get rid of the stress test. What's your comment on that?
Yeah, I agree, Emilio. The stress test, listen, was originally came about when interest rates were sub 2%, right? And definitely a stress test was warranted and has done its job. However, underwriting a mortgage these days, 200 basis points above the contract rate is putting us, above 7.5%, which is not what was anticipated originally when the stress test came about. So affordability right now and qualifying buyers at over 7.5%, I think is just not necessary any longer. So,
is there any way for you to quantify that? Like in order, let's say, like you said, you were talking about 7% stress test versus what you're getting on the the 5.9. If you're getting something variable, it's a lesser rate. Can you quantify that?
So off the top of my head, right? Like I think previously we were looking for every $20,000 in one's income would get us $100,000 in mortgages. Today, with where interest rates are, and the stress test is the contract rate plus 200 basis points is where we have to qualify people in underwriting their mortgages, has lowered that affordability down from $100,000 to now $75,000 per $20,000 in one's income. So considerable amount of money that or less power that you have in purchasing side. Absolutely, and a lot of files, because of the affordability in certain pockets of the areas, haven't really dropped as much as other areas. We're seeing that a lot of files are coming in with co-signers, mom and dad, or joint ventures with friends and families, right? So every application is coming in with more than just one applicant.
Now, if I'm getting qualified, okay, I'm a buyer. I'm looking to get in the market. Hey, Simon, I want to buy something, and I'm getting qualified today. Is there, if I'm getting qualified today, do I have to worry about interest rates going up? Is there something that I'm locked in? What kind of rate am I going to be guaranteed? And the second part question, I guess, would be, what would be your suggestion? Am I doing a 1 year, 2 year, 5 year?
Yeah, everyone's situation, Emilio, is a little bit different. And that's why we try to cater to everyone's needs and diving in a little bit deeper and asking questions on, what their current goals are to their future goals, to be able to address, whether they're going in a shorter term, a variable rate, or a longer 5-year fixed rate, depending on their goals, right? To answer your question in regards to if someone would be buying right now in the market, I highly suggest getting a pre-approval, which would secure interest rates for 120 days, as we are in a increasing interest rate environment, and it would just protect them from rising interest rates. A pre-approval is highly suggested, and that also, you don't need to really make a choice or a decision at this exact moment, but if they are deciding to go with a fixed rate when the time comes and they've put in an offer and you have a live offer in your hand now, at least you have both options, fixed or variable rate, with the rates that they were offering when they originally started looking for a property. So to your question, a pre-approval would be highly recommended if you are interested in buying a property. And the follow-up question, could you remind me again? What
was either, am I doing would you be suggesting a 1-year rate, 2-year, 3-year, 4, 5? Like what kind of?
So, depending on your current situation, right? With the outlook of the market and interest rates expecting to come back down in 6 months to a year, I think a shorter term, definitely, if they're looking for a fixed rate, is recommended, whether it be a 1, 2, or 3-year fixed. If not, a variable rate, although there is expecting to be another increase in December, is definitely a good option as well. Just depending on what your cash flow situation looks like, right? With a variable rate, that gives you a lot of flexibility, Emilio, where clients can lock into a fixed rate with no penalties or discharges, or if anything happens and need to sell the property for whatever reason comes up, you can do so with minimal costs on a variable rate as opposed to a fixed rate.
Now, I've been getting some calls, and I don't know if you've been getting the same calls, but I often get calls where people are like, hey man, am I the only one that's feeling this? Like, I got a client, husband and wife made good money, got a couple of investment properties, and on top of their own residence. So they got in their portfolio three properties that they hold. And they're like, am I the only one that's feeling this pinch? Because I'm now having to pay an extra $1,500. And one of the questions I've been getting is should I sell? What are you advising? Actually, maybe the first part is, are you getting those kind of calls or those kind of questions as well?
Yeah, we're fielding a lot of those calls, Emilio, and the message that I'm saying, we're reviewing everyone's budget and seeing if they have that room to be able to afford the monthly payments if we are to see another increase in the prime rate in December, right? And if that is the case, then I'm recommending to weather the storm and stay with the variable rate with the sentiments of the economists in the 5 major banks that rates will be coming down the end of next year, and being able to capitalize on the lower interest rates and bringing their payments back down to something where they've been a little bit more comfortable with, as opposed to locking into a fixed rate now and having that crystallize and having that interest rate for the next 5 years, right? It just, I think it's more beneficial to kind of weathering the storm. But again, everyone's situation may be a little bit different, and going through and diving into one's expenses and budget may be able to uncover whether or not locking into a fixed term is best for them.
And I think what I like about what I heard from what you just said is, obviously these clients are not alone. There's a lot of people that are feeling the same way. Because obviously, investing in real estate it's always been a robust kind of investment because of the way the market has been going. Another thing, what I like that I hear from you is you're not taking a reactive stance to somebody's question. You're actually being responsive, which is let's sit down, let's address it, let's see where you're at, let's see where your affordability is. Because there's a lot of, like realtors, there's a lot of mortgage brokers. We agree with that? And not all are going to do the same job that you're doing. And I think appreciate that, especially for the viewers out there that are watching this. You want to get that. You want to get that kind of responsive approach to making sure that your mortgage needs are being addressed in the best way possible. So I know you said, we're looking at this as weather the storm, and obviously you're addressing this kind of, are you still telling people to, if they have the capacity to refinance? Are you advising that they get in the market, or are you kind of letting them?
Just so I understand your question there, refinancing to purchase investment properties yeah, okay.
Because you're going to get that. Well, listen, the prices have come down. We're looking at what they were in February to now. You're probably down in some places anywhere between 25 to 35%, which translates to about 250, 300, 350. So if I'm a person that's got a lot of equity, would that, and I'm looking at maybe getting into the market for another property, is that something that you're advising? Or again, I know it's a case by case, but what kind of stance are you taking on that?
Yeah, it's definitely a case by case, right? Depending on how much equity one has and how much income that person is or the couple or partners are earning, would be able to sort of gauge whether or not they're able to take that leap to buying an investment property. But let's just say for example, that they have the ability and they have the cash flow and the equity to be able to refinance, to be able to purchase a property. I would highly recommend now is the time because like you said, prices are down anywhere from $250,000 to $300,000 from where it was at the beginning of the year, right? So if you take today's higher interest rates with the lower purchase price and a less mortgage that one would be obtaining, you do the math with today's higher interest rates, it actually works out to being less of a monthly payment comparative to where it was at the beginning of this year, right? So one, if you're looking or on the fence to buying that property, I think now is a better time than any because you're not having to compete with other buyers and multiple bidding wars to being at that higher purchase price. So you're getting a deal and not having the emotions of having to bid against somebody else in the competition.
And I'm assuming based on the market change, you're seeing a lot more offers now where they're allowing you to still have your finance condition, whereas in the beginning of the year, that was almost obsolete.
Yeah, it's definitely obsolete, and I'm actually quite thankful for that because, during those times, very stressful times, there's a lot of variables that could derail a financing. The appraisal doesn't come in. Does one have enough down payment plus closing costs? And going in blindly without all of those at your fingertips because, some takes time with appraisals. Maybe there's an inspection that goes wrong, and now you're on the hook to covering this and maybe having to out-of-pocket costs that you weren't anticipating. So, I think the days of the wild, wild west and going in on firm offers are behind us right now, and definitely with the financing clause, I highly recommend it, and I'm glad that we're seeing more and more applications or offers with financing.
So that was actually, you lead me actually to my next question, which is, have you seen more people now that especially buyers, now that they see the market has kind of come down, are you seeing more of those maybe millennials, younger buyers kind of wanting, seeing an opportunity to enter the market?
Yeah, a lot of millennials are having the ability now to get their foot in the door, whereas before they're, going up against 20, 30 other buyers. So now there's a lot more people in conversations, getting them pre-approved, getting them ready to get in the market. So I think Q1 of next year, we'll see some more transactions and millennials trying to get their foot in the real estate market.
So Simon, if I'm a buyer and I'm looking at this opportunity to get into the market, besides calling you, of course, what should I be getting ready? What should I have? Maybe start. What kind of paperwork should I start getting ready to get myself qualified?
Yeah, it's a great question, Emilio. If you're looking to get into the industry or into the market and buying a property, highly recommend getting pre-approved and also diving in deeper into budgets, what your affordability is now, what you're comfortable in paying in mortgages. At the same time, asking yourself some questions in regards to what your current goals are and future goals. It will definitely help someone like myself determine what sort of products I'm advising you on.
That's great information and good feedback to give back for people to understand that it's not just the paperwork, it's also addressing their budgets and what they're going to be doing long term. I think that sums up about all we have for this episode. Really appreciate your time. We're obviously in that festive mood here and wrapping up the year, which is, I'm sure it's an exciting time of the year for you guys as well and for you and your family. Really appreciate you taking time from your busy schedule. I know that you don't got a lot of time often these days because you got 2 little ones at home. So I appreciate that. And for those of you that are, again, looking for that sound advice, somebody who's going to listen to you, someone who's going to advise you, and give you a educated advice and based on experience and what's best suited for you, I highly recommend that you contact Simon and his team, and they'll make sure that they look after you. I know I've dealt with him in the past. We have a lot of mutual clients, and often, you know, when I talk to people in the industry or run into people that know you, I often hear a lot of good stuff. So obviously you must be either paying them well or you must really do a good job, which I think is the latter one. You really do a good job.
Thank you, Emilio. Thank you for the kind words. I really appreciate it, and the opportunity of being on your show here.
Guys, on behalf of myself, Simon Lin, and Bespoke Mortgages, and Espinosa and Associates, I'd like to say Merry Christmas, Happy Holidays, and have a beautiful Christmas with your loved ones. Cheers.